Hello, everyone, and welcome to another edition of the Smart Investor Podcast. And what a day we have had today on the Dow Jones Industrial Average, the major U.S. indices, and the major indices across the world. We have had a pretty significant sell-off in the market. Now, just to give you some background information, what has been happening in the markets, taking a look at the Dow Jones Industrial Average, is that the market was in a consolidation pattern. The market made a new high in March, early March 2015, and has just been in a consolidation pattern ever since. If you would like to take a visual representation or a visual look at the charts that I'm speaking about, you can go to smartinvestorcentral.com and look at the real-time charts as I speak. Now, funny enough, what sparked the sell-off today was the Greek crisis and the uncertainty surrounding the situation in Greece. And while we did have a sell-off in the major stock indices, funny enough, the euro was up on the day. Early Sunday morning, the euro gapped down, and it looked like we were going to have a huge sell-off in the euro. But what happened was that the euro recovered. Euro recovered against US dollar, starting late Sunday evening, and rallied ever since. So it's very interesting that we're having a uncertainty with the Greek crisis, but the euro actually rallied and closed up on the day. So that is very interesting news. Okay, taking a detailed look at the Dow Jones Industrial Average, the market closed down and closed at 17,596, and the market closed exactly at our first area of support. Our first area of support in the market is 17,500. And it's very important that investors look at price charts and see what's happening, because it puts what's happened in some context. So you can see, okay, yes, the market is down, but is a broader uptrend in the market? Has it ended? And those are the things that you need to pay attention to when looking at the markets. So the market closed at our first area of support at 17,596. If we see 17,596 lost tomorrow and the market does not recover and we don't get a bounce out of this area, the next area of support is down at the 17,000 level. If the market closes below 17,000, we could be in for a much larger sell-off in the market. So remember, 17,596 and 17,000. Those are the areas you are looking out for to see if what will happen with the Dow Jones Industrial Average. Taking a look at the S&P 500, market was also down very sharply, and critical support in the S&P 500. As you can see, critical support in the S&P 500 is down at 2041. So the market has not broken that 2041 level just yet. The market actually closed at 2057. So the first area to look for in S&P 500 is 2041. And for clues as to market direction, it's better to look at the S&P 500 because it gives a broader view of what's happening in the stock market as opposed to just the 30 stocks that make up the Dow Jones Industrial Average. Okay, if we see 2040 breached on the S&P 500, the next area of support is at 1,972. If we see that area taken out, it could definitely lead to a much broader sell-off in the S&P 500. Taking a look at the Nasdaq stock index, the market was down below 4,397, and it's above its critical area of support. So I wouldn't say, okay, the market is in panic mode just yet, but we want to see if the market closes below the low of 4,280. That will definitely trigger a broader sell-off in the market. So these technical levels are very important. Remember, the reason why we look at the market price action is because the smart money, it takes large money to move the markets. So if for a market to sell off, that means large money is moving out of the stock markets. But a common trick that the smart money uses is to allow the market to drop and then snatch up shares or whatever market at a bargain. So you have to look out for that. I mean, looking at the major stock indices, we are in a rally since 2009 and we're now 2015. So we are due for a correction. But the question is this the correction that we are due? And it's still a story that is unfolding. Okay, taking a look overseas, and the first market to look for is the FTSE. And the FTSE was down on the day, closed at 6,753, and the market is on the monthly chart. Is if it closes at this level for the month, that would be fairly bearish for the FTSE, because what we could see is a double top on the monthly long-term chart. For those of you who are looking on the blog, you can see, and if you would like to look at the charts, you can go to smartinvestorcentral.com. But you see that we have top one here that was made in 1999, and the question is this top two here? Technically, this FTSE market does not look good at all. Definitely does not look good. Okay, moving on to the German DAX. Very interesting move in the German DAX. While everyone was down, the DAX was actually slightly up on the news of the Greek crisis. So what are the markets telling us? Especially the euro and the German DAX, are they saying that, okay, if Greece goes, that would lift a burden on them, and they will actually not have to pump as much money in the Greek economy? So maybe the markets are seeing that as being a net positive. We just have to wait and see on how the market actually reacts to the news. But so far, the euro has not suffered detrimentally. Okay, taking a look at the euro, detailed look at the euro. As I said, it's slightly up on the day, and it's up on the day versus the British pound. It's up on the day versus the Swiss franc, and it's slightly up on the day versus Swiss franc. It's up on the day versus the Canadian dollar, big time, and it's up on the day versus the Japanese yen. Actually, the yen gapped down to the downside, and the market was able to rally to end up slightly. Actually, with the Japanese yen slightly down on the day, closed at 137.73 with the euro. Okay, so it's a story that's unfolding. Now, with all this crisis, what has gold done? And if you take a detailed look on the gold market, you see that the market was in a downtrend, and that downtrend has has just stalled out. I mean, the market has not rallied. It's not really going down much, and we're in a consolidation pattern, as you can see here on gold. And the market, gold was up slightly on the day, but not. It's not a rally that you would have expected to be. It's not a move that you would have expected to be a massive rally, based on the news so far. But the market is up slightly on the day, and I know there are a lot of gold bugs out there, but for gold to really start to take off, it needs to clear all of this overhead resistance. It has overhead resistance at 1230 and also at 1300. If you hear that the market has cleared the 1300 level, that would be a signal that it could be, gold is looking like it could turn around and make a move to the upside. I know a lot of gold bugs have been waiting on this move waiting patiently, and a lot of folks have lost a lot of money in the decline in gold over the last 3 or 4 years. But the wait could be over. Now, if we do close below the 1150 level on gold, all bets are off, and you may see another massive sell-off in the gold market. So that's something to keep in mind. And remember, a common classic mistake that investors make is to look at what's happening fundamentally and then make investment decisions over the next year or two based on what's happening today. Remember, a lot of these things have been priced in already, and it's important to look at how the markets are reacting to the bad news. For example, in 2008, when the financial crisis hit and the stock market was selling off, a lot of folks were predicting that the gold market would also explode. And what happened in the August, September, October was that gold actually declined in 2008, and the market was off about 10-15% during the crisis. So it's always good to look at how the markets are reacting. Look at the charts. I mean, you don't have to be an expert at reading charts, but it's good to see what the market is actually doing with the information that is being presented. And also, another market to keep an eye on is the Japanese yen, because in times of crisis, the Japanese yen often strengthens, and we'll keep an eye on and to see how the Japanese yen is reacting to this news. Today, it was up versus US dollar. The chart that you are seeing on the screen is a Japanese yen versus the US dollar. So this means when this chart is going up, that means the US dollar is increasing, and when it's going down, that means the Japanese yen is increasing. That's how forex rates are quoted. Okay, so we did strengthen slightly on the day with the Japanese yen, and if we see strengthening in the yen and the market takes out this 116 level, that will be very bullish for the Japanese yen. Okay, before we go, let's take a brief look at crude oil and what crude oil did. Crude oil was down slightly on the day, and just a history of oil. If you see a close below the lows that were made in mid-May, the $56 level, if you see a close below $56, that would show that the market could be for another decline in crude oil. So that's something to look out for. And remember to look at these charts. Go to smartinvestorcentral.com and you will see the video analysis that you can keep an eye out on. Okay. Thank you very much for listening to the podcast. We'll be back again tomorrow as the story unfolds. And remember, don't listen to the mainstream media. Listen to what the charts and the prices of the markets are telling you, because the prices is what determines what if you are in a profit or if you are losing. And the prices determine the movements of the markets and not the mainstream media. Too often folks are tricked by the mainstream media into making bad decisions. Okay, so to get analysis, go to smartinvestorcentral.com. This is Beyond, and I hope you have a good investing day. Thanks.